this price action will pick up expiry today as well. So it's got to at some point. We'll focus back our energies on that in a bit. One of the key things which has happened in the metals and mining space over the last 1.5 to 2 years is the fact that India, from being an influential player, not a very large player, but being an influential player in the global market, is now on the verge of becoming an importer. The way things are going, sometime over the next 1.5 years or so, we'll get to a situation where India will become a net importer of iron ore. We all know what the troubles are. We know what has happened. 3 states have had mining curbs, blanket bans, and the company which has taken the hit in all of this has been Sesa Goa, the Goa-based mining iron ore miner, which used to be a big exporter to China. Of course, Sesa Goa's stock price is more influenced because, or actually is more tied with the fortunes of Sterlite-Sesa merger, which has now been announced. But nevertheless, operationally, cash flow-wise, it's taken a very hit. Let's talk about the dynamics of the iron ore market and how the management at Sesa Goa sees this panning out from here. Mr. P.K. Mukherjee, Managing Director at Sesa Goa, is with us to take us through what he thinks is happening in the market. So thanks very much. Great to have you with us here on Profit. Share your views, sir, with what has happened over the year and a half or so, and the possibility of the country as such turning an importer of ore.
See, unfortunately, all the developments are in the negative side so far Indian iron ore mining is concerned. So, as you know that iron ore mining, which was banned sometime in the middle of last calendar year, although it has been restarted partially, but effectively not much of material is coming out, particularly from those A-grade mines which have been allowed to resume the operations because of various other reasons. And B-grade mine, which includes ours, it is yet to start production. It is awaiting Supreme Court clearance as well as some state government clearances. So for Goa mining is concerned, you are aware that post middle of September, everything is closed. Not even a kg of material can be moved from one place to another. So it is and also in the Odisha, which is another sector from which used to be exported, besides a lot of iron ore used to be supplied to the domestic industry. As I understand that in case of Odisha also, the situation is not very bright. Rather, exports are more or less stopped because of the economical reason, besides various procedural reasons. So I think overall iron ore sector, 2011 middle onwards and 2012 as we are going to very soon, it is a very depressing situation. And more than depressing, at the moment there is a huge uncertainty. That is the basic cause of problem in the whole iron ore market, both by the domestic, for the domestic industry who are consuming material or used to consume material from Karnataka, as well as who are dependent on Odisha supplies. As you know, Goan ore is not touchable by the Indian domestic industry at this stage. So that is uncertainty in domestic industry, and of course in the iron ore market in the world, I think India has India's supply situation is so uncertain, which is causing a lot of excitement to our other competitors from Australia, Brazil, and South Africa. And as you must have noticed that recently the prices have again going up. Of course, the price is going up and down in between. But I'm sure Indian supply in the world market, 100 million ton or so, which it has reached, definitely that lull is creating a problem on the demand situation, and that has got some impact in the iron ore pricing situation, which is being enjoyed by our competitors. More importantly, the world market, which was developed particularly by the Goan miners, which was developed by the people over the decades with a very painful process. The best of the steel mills of the world who had ultimately became to some extent on Goan iron ore in their blend, whether it is Nippon Steel Mill or Kobe's or Sumitomo's or Bao Steel of China or Chorus of Europe. So they are, I think, have already learned how to live without guano. And in the process, this market, I don't know, even once Indian production starts back and guano production starts back, how difficult it would be to get back that market. I think that is a big, big loss.
Loss of relationships, essentially, is what you're referring to, even after, at some point in the future, when production comes back on. So what is your thought on that? How far away are we before, mining at least comes back to normal levels in other states and in Goa, sir?
You see, basically, once all the clearances are in, whether by the regulatory authorities or by the Supreme Court, then I don't think iron ore production to resume it will take a long time, because iron ore being an open cast mine, and mostly the people who are involved in the mining, I think they are still around there. People like Sesa Goa who have not yet discharged a single person. So these people will be available, and we'll be able to resume soon. Maybe in a month or so, we can come back to our desired capacity. But the key question is that when this production will be allowed to resume. That remains the key question.
So the focus excessively over the last 1.5 years has been on the mining situation. Naturally, mining in Goa is completely stopped. You said global ore prices have kind of been supported because of the situation in India. Could you talk about that a little bit more with the context of China in particular?
See, whether Chinese economy or for that matter any economy consumes steel, I think so far steel is concerned, this is one of the metal which will be required if the whole world continues to see for development, whether in the infrastructure sector or in the lifestyle matters, white goods. So steel will be required. So there is no question of steel suddenly will be going out of our consumption. So far China is concerned, I think it is a big geography. They have got a very, very solid support and political will to develop their country. And there is a huge country backyard other than the coastal side in China, which needs the infrastructural development, and their government is taking it through. So far Chinese demand is concerned, going forward in the until medium term, so maybe next 4 to 5 years, beyond that it is very difficult to guess. I think the Chinese demand will continue to be reversed. And besides Chinese demand, Indian demand is going up, trying to go up, but unfortunately investments are not coming in because of various reasons, not because of the dearth of capital or dearth of the will from the investors, but because of various regulatory reasons, if I may use the word. And of course there are various NGOs and all, they are somehow one reason or other it is not coming into the picture, the steel capacity. But there is a huge potential for in India itself for domestic consumption of iron ore to go up. And India needs steel because India has to develop continuously and there are committed planned expenditure for infrastructural sector ultimately which is not seeing the light of the day. So for demand is concerned of iron ore, I am bullish. There is no cause of concern so far iron ore demand is concerned. Now whether price will be $100 or $150 or $90, that is a matter of demand and supply at a particular point of time.
But what is your view, sir, on prices specifically? You said demand is not a problem, but prices. I know, I mean, it's very variable, 100, 150 could be anything, but what's yours?
You see, I have maintained that iron ore price is a range-bound price. 5 months before, it was a abnormally low. 5 months up, now we are talking about in 5 months it has gone up so much. So actually it has gone down also before 5 months. So you see, basically what is the first of all demand and supply, and second thing is, as you know, that China is the biggest consumer of iron ore, particularly the seaborne iron ore trade. And in China, the 50% of roughly used to be consumed from the domestic sector supply of iron ore. And so domestic iron ore supply, their marginal cost becomes the floor level more or less, and that used to be $130 and $140. Around that price should be the floor price of iron ore for going forward. Now $10 here and there or $15 here and there, it can go up and down depending on the particular times demand and supply and market excitement as to the steel market going forward.
Okay, sir. That's essentially the industry environment as of now. So roughly between 100 odd dollars is what you're putting as a range. Could be anything. Right now, very strong. So let's just talk about the Sesa Sterlite merger and what should be. The process has been pushed into 2013. Was expected to be consummated before that, but there is one approval which is pending. Could you just take us through what is going on there?
See, so far merger details is concerned, as you know, that both the Chennai High Court and Goa bench of the Mumbai High Court are seized of this matter and it is proceeding. Unfortunately, it has not proceeded in the same space as we desired. We originally were very hopeful that by end of December this process will be through. But as we see now that it is definitely not December because courts are on holiday right now. So going forward, we are expecting it to be completed as early as possible, because it is only the court process is now living. Actually, in case of Chennai High Court, the whole arguments and everything is over. It is only the order has been reserved. So order we are awaiting. And so for Goa bench of the Mumbai High Court, the actual petition has been started to be hard. There are certain what do you call central government side, there is regional director side. They have to put forward their arguments, whatever they have affidavit they have submitted. There are one or two shareholders who have submitted their affidavit. So this will be hard, argued, and then hopefully it will be completed in the course of next 1 month or so. That is our optimism. So for the Sesa Sterlite, how it will pan out, I guess Sesa Sterlite, whatever, when we have announced the merger sometime in the February 2012, so whatever we have announced, I don't think any reason has arisen to change that view. And so Sesa Sterlite will continue to be the very robust organization with a very diversified portfolio, and it will be, once the merger is over, India's entry into the world metal and mining giants. So Sesa Sterlite will be one of the top 6 or top 7 world's mining giant, metal and mining giant, as we have forecasted.
Mr. Mukherjee, thanks very much for your time, sir. Great to have you with us here on the show this morning. Good to get that from you on the industry dynamics here, which remain extremely tough. No timelines when things will improve. But as you said, once they do, mining can be started very quickly because mines are open cast, so no problem there. And of course, prices remain strong. But the one reason why they remain strong is because India is out. The Indian production is out of the market. The merger, Mr. Mukherjee pointed out, Sterlite merger should be complete in the next 1 month or so, approximately. So that's Mr. P.K. Mukherjee at Sesa Goa. 195 on the price. We're taking a very quick break. Back in 2 minutes. We have Mr. C. Rajendra Prasad, CMD at CCL Profit.